Kunal, coming to you first. A bit of a muted day, but I mean, is it really fair to call it a muted day because we're holding fort above 13,000? And what's your high risk and low risk idea for our viewers?
Well, yeah, I think you can call it as a muted day, Varun. There are no two doubts about it because we've been sort of accustomed to the kind of gains and the stellar recovery and the rally on the indices. So I think in that regards, it's been a muted start so far. Nevertheless, I think there are some specific observations related towards the market. Now, in the last 2-3 days, especially the start of the December series, the open interest of both the indices of the Nifty and the Bank Nifty is substantially lower. So I think if I'm not wrong in terms of the stats, the OI for Bank Nifty has dropped by almost 25%, and the open interest for Nifty has dropped by almost 18%. And now that could be one of the reasons why I believe that the start of the December series, the action in the indices has gotten a bit subdued, and the action is more towards the mid cap and the small cap end of the market. So I think in that aspect, I would believe that the market texture could remain a bit more sideways for the next couple of days till the time we don't see some heightened activity coming into the open interest front for both of these indices. Now, I would suggest a couple of buy calls. Still expecting that many of the stocks and the stock specific momentum would continue. So the first one is about ICICI Lombard. I think that stock looks extremely attractive to me on charts. The last 10 to 12 days we've seen a stellar move from this stock. I think from 1300 levels, 1320 approximately, the stock has jumped up to almost 1490, 1495 where it's currently trading. And I think even at current levels, it looks strong for a breakout on the longer term time frame chart. So would suggest a buy on the stock for a target of 1500, 1600 plus, and stop loss could be kept at 1450. We'll term this as more of a moderate risk idea. And the second would be a buy on Wipro. Now this is interesting because after a stellar month in the month of September for many of these IT stocks, the last 2 months had been a bit more sideways. But I believe on the indicator fronts, many of them on the daily charts, I think Wipro is showing signs of a breakout on the indicator front. So I'm expecting that the mild pause, a 2-month consolidation could now get over pretty soon for the stock, and you might see one more round of upside coming into this name as well. So I would suggest a positional buy on Wipro from current levels of 356 to 57, targets of 400, and stop loss at 344.
Okay, Kunal, thanks for your high and low risk ideas. Gaurang, hi, morning. What are your wealth creation bets?
Well, thank you, Karna, and morning to all of you also. Yeah, I do concur with the view that maybe for, given the outperformance on the frontline indices, you may see large cap stocks going for a little bit of consolidation purely because of the, run up, the shorter time frame, valuation and earnings outlook. So there is a possibility wherein your large caps may go in for a consolidation and broader markets can tend to outperform going forward from here on both mid cap and small cap. With that perspective, given the kind of outlook from a longer time horizon on the fundamental basis, we have two investment ideas. The first one is from the specialty chemical space, and the company is PI Industries. Stellar performance over the last couple of years, and a kind of a recovery, especially in the second quarter gone by, the numbers from PI Industries. Long-term, low-risk fundamental idea with a target of 2,950 on PI Industries. And the second one is from the life insurance space, and this one is SBI Life Insurance. And we as a brokerage house, Geojit has been extremely positive on the life insurance sector. And you have very few names with a larger market share, credible names, and SBI Life happens to be this one. And given the kind of opportunity in terms of ensuring the uninsured, we believe that the larger players in this particular segment is going to have first mover advantage. From a long-term point of view, low-risk investment idea, SBI Life on the fundamental side with a target of 1,100. And mind you, Karanya, these targets would definitely tend to get revised upwards in case if the earnings to come by surprises out in the positive side.